Hello and welcome to CoinLikes. Today we are going to learn triangles. What is a triangle? A triangle is a chart pattern depicted by drawing trend lines along a converging price range that connotes a pause in the prevailing trend. Technical analysts categorized triangles as a continuation patterns. There are three potential triangle variations that can develop as price action carves out a holding pattern, namely ascending, descending, and symmetrical triangles. Now let's examine all of them. First, ascending pattern. An ascending triangle is a breakout pattern that forms when the price reaches the upper horizontal trend line with rising volume. The upper trend line must be horizontal, indicating nearly identical highs, which form a resistance level. The lower trend line is rising diagonally, indicating higher lows as buyers patiently step up their bids. Ultimately, the buyers lose patience and rush into the level above the resistance price, which triggers more buying as the uptrend resumes. This upper trend line, which was formerly a resistance level, now becomes support level. Second, descending pattern. A descending triangle is an inverted version of an ascending triangle and considered a breakdown pattern. The lower trend line should be horizontal, connecting near identical lows. The upper trend line declines diagonally toward the apex. The breakdown occurs when the price collapses through the lower horizontal trend line support as a downtrend resumes. The lower trend line, which was support, now becomes resistance. Symmetrical pattern. A symmetrical triangle is composed of a diagonal falling upper trend line and a diagonally rising lower trend line. As the price moves toward the apex, it will inevitably breach the upper trend line for a breakout and uptrend on rising price, or breach the lower trend line forming a breakdown and downtrend with falling prices. Symmetrical triangles tend to be continuation break patterns, meaning that they tend to break in the direction of the initial move before the triangle formed. For example, if an uptrend precedes a symmetrical triangle, traders would expect the price to break to the upside. Now, let's examine the examples in order to better understand the triangle formations. Here, if we look carefully, we have a descending triangle. We have a lower horizontal trend line and upper trend line represents falling trend. Traders should watch a volume spike and at least two closes beyond the trend line to confirm the break is valid and not a fake. As you can see here, we have a breakdown with high volatility candles, and after the breakdown, price retests this support zone and close the candle below the support zone. Now our support zone become a resistance. If we consider all these bearish signs and take a short position here, as you can see, it's a successful trade. You can support the position you will take with other indicators instead of taking position only according to the descending triangle. Let's examine it on the example. Here, if we look carefully, we have a descending triangle. We have a lower horizontal trend line and upper trend line represents falling trend. For a confirmation of a sell signal, I will use Ichimoku indicator in this example. Using these patterns with other combinations of indicators will provide a safer and more profitable trading opportunity for us. As you can see, from that point, Kuma cloud is red and moving downwards. This is a good short signal for us. Now, first, we determine our descending triangle. Second, we catch a Ichimoku indicator bearish signal. As you can see here, we have a breakdown with high volatility candles. If we consider all these bearish signs and take a short position here, as you can see, it's a successful trade. Now let's examine ascending triangle examples. In this example, we have a significant horizontal resistance line. And also we have a lower trend line, represents rising trend. Now we can say we have an ascending triangle pattern and we are looking for breakouts. The breakout should be continuous with the high volatility candles. As you can see in this breakout area, we have that condition. Price breakout to upper resistance line with a high volatility candle. If we consider this breakout signal as an entry, as you can see, it's a successful trade. In this 4-hour Ethereum chart, we have a significant horizontal resistance line. And also we have a lower trend line, represents rising trend. Now we can say we have an ascending triangle pattern and we are looking for breakouts. As a trader, we need to be careful about these false breakouts. The breakout should be continuous with the high volatility candles, like the ones here. And to avoid such a false signals, you can use EMAs as a support. In this example, I will use 50 EMA and 100 EMA to determine my breakout and entry point. As you can see here, 50 EMA crosses above the 100 EMA. This can be considered as a long position. And in the same zone, we have an ascending triangle breakout with high volatility candles. You can also set your stop loss slightly below the breakout. And if we consider this EMA and breakout bullish signals, and if we take our entry here, as you can see, it's a successful trade. With using many combinations like that, you can make more safer and successful trades. And if you want to make your job easy, you can use CoinLike's custom signal tool. Like in the last example, you can choose ascending triangle and 50 and 100 EMA crossovers. CoinLike will notify you when it detects these combinations. Now let's examine a symmetrical triangle example. As you can see in this example, we have a composed of a diagonal falling upper trend line and a diagonally rising lower trend line. This shows us we have a symmetrical triangle and we need to search for breakdowns. If we look at this area, we have a breakdown, but how can we confirm it? Price break down this lower trend line with a high volatility candle. This is our first signal for a short position. After the breakdown, price retests this lower trend line and close the candle below the trend line. This is our second signal for a sell position. If we consider these bearish signals and take our entry after the retest, as you can see, it's a successful trade for us. If you want to easily detect triangles, you can use CoinLike's pattern tool. Simply opening and selecting triangles, it will give you hundreds of coins information. With this way, you don't have to spend hours and hours on computer. And if you click this button, you can see it on the charts as well. If we check the same coin on TradingView, as you can see, it's a correct signal. We learned 3 main types of triangles. Now let's look at the one specific pattern, the pennant. What is a pennant? In technical analysis, a pennant is a type of continuation pattern formed when there is a large movement in price, known as the flagpole, followed by a consolidation period with converging trend lines. The pennant followed by a breakout movement in the same direction as the initial large movement, which represents the second half of the flagpole. It is important to look at the volume in a pennant. The period of consolidation should have lower volume and the breakouts should occur on higher volume. Traders take their positions by following the symmetrical triangle breakout formed in this pennant region. Understanding pennants and triangle patterns will be very useful for your trades. For not to miss these signals, you can create an alarm on CoinLike. And by connecting these combination signals to LagsBot, you can also use our auto trading solution without needing anything. Or you can use our application to not avoid these alarms you created when you are not at your computer. Learn and earn. CoinLags. Thank you for watching us today. See you next time.